All right, in the famous words of Monty, the future is now. I hope that you had a great kickoff to the morning here on the innovative stage. Everybody around the stage, feel free to come in. This is the sandbox of innovation. This is where you can feel fenced into all the beautiful things that are about to happen today and for the rest of the evening. Don't forget that if you still want to come to the gala, I do believe there are some tickets available, so go to your info point and get those as soon as you can. We have an amazing panel that is about to be lined up. Before we do, anyone that is around, please feel free to come in, grab your headset. You'll only be able to hear the folks on the panel if you're inside this lovely environment right here. Awesome. Without further ado, then let's let on to stage these lovely panelists for blockchain solutions for emerging markets. Alex, take it away. Let's give them a round of applause.
We'll connect more.
Yeah. That was lower than I thought.
Testing. Oh, it does work.
1, 2, 1, 2. Can you hear?
Okay.
Hey, I'm Mickey.
Hi, I'm Dan.
Good morning.
These headphones don't fit.
Good morning, everyone, and welcome to our session on innovative aspects of DLT in emerging markets. We're joined here with a really cool panel of builders and funders. And to kick this off, we'll just go from left to right and have our panelists introduce themselves. I'm Alex Marza. I work at the Cardano Foundation. Typically, I focus on partnerships, and I'm generally the blockchain for sustainability, blockchain for good guy, so I'm really happy to chat to these guys today. Glenn,
Yeah. Nice to be here.
tell us about Empower and what you do there.
Sure. We're responsible for affordable housing finance in Africa. So it's all around the transformation. So more than 80% of income in Africa and emerging markets is informal. So therefore, by definition, a mortgage is not a financial product that works. It can't. For a mortgage, you need to have identification, you need to have stable income, you need a job, you need to be able to prove your job. None of that works in Africa. So how do we create an affordable housing product that takes that into account? And obviously the blockchain is key in that, in terms of making that work.
Good morning, everyone. My name is Andre. I'm one of the partners at Modus Africa. We're a VC platform focusing in early stage and growth stage companies on the continent. And our thesis quite differs from most of VCs on the continent. We look a lot at blockchain, how it enables startups to solve big problems globally, usually global south, but it starts from Africa. We also look at deep tech, AI, and so forth. Happy to be here.
Hey, everybody. My name is Dan Friedman. I'm the founder and CEO of Zengate Global. And Zengate is building a platform called Palmyra. And Palmyra is a tokenized commodities DEX, tokenized commodities exchange that focuses on underserved commodities in emerging economies. And so what that means is there's a subset of commodities that don't have access to traditional commodity-related services and value-add services that say a more traditional commodity like gold or like silver would. Still, they are multi-billion. I mean, it's literally $1 trillion market. And so what our platform does is it basically levels the field for these particular commodities and creates opportunities for them to enjoy the same services like, say, trade financing or the possibility of trade of futures contracts and forward contracts. In essence, it's also very empowering to emerging economies where a lot of these commodities come from because you're really giving them access. You're giving them access that they haven't enjoyed before. You're giving them access to a wider market through digitization. And this is why it's so inspiring to be in this particular field, because we feel that our first principles are at the core of what this entire thing is about, or what the blockchain movement is about, which is basically empowerment, which is basically opportunity inclusion. So this is why it's so exciting.
Thanks.
Good morning, Alex. Good morning, esteemed colleagues. Good morning, everybody listening. Good morning, Dubai. I'm Mickey Watkins. I'm the CEO of World Mobile. World Mobile connects the unconnected. World Mobile serves the underserved. There's 2.7 billion people on this planet that are totally unconnected. We estimate there's around another 3 billion that are underserved. And we're here to fix the problem with the sharing economy.
Awesome. So there you have it, our whole awesome panelists. And I think I want to just start with Africa. Andre, you mentioned, you're looking at a global south thesis, but you're starting in Africa. Why is that?
So I think that's a personal question because I'm originally French-Canadian, formerly investment banking, very North America, European-centric, very far away from Africa. Unless you're doing mining or oil and gas, otherwise we don't understand the continent whatsoever. I actually joined a family office 7 years back where they made their wealth on the continent and started doing private equity, and then I led the VC division there. So we learn through a lot of mistakes and some haikus as well, but a lot of mistakes. And we started seeing in our portfolio on the continent that we get the reports from from investments, and we've seen crypto, we've seen blockchain, we've seen AI enabled, and we thought, what's going on? That was like 3-4 years back, and that's when we clicked, and we thought, this is solving big problems, those technologies. And so we decided to double down and create a bigger vehicle just to be able to support this momentum.
And what are some of the key trends that you're seeing right now, well, actually over the past 4 years?
Yeah. Well, I'm going to skip a little bit the last, let's say, 12 to 18 months because everybody knows what happened. But it was definitely like a double whammy that hurt us, both from a VC funding and also from a blockchain perspective. But the momentum was tremendous leading up to that. $400 million in funding dedicated for blockchain in Africa, 400% growth, some good momentum, good numbers coming in, and obviously we knew what happened the last little while. But what we're seeing now, and we're quite optimistic about what's going to happen in the next 12 months, is we've seen the big players lining up and realizing that the continent and global south usually offers these big opportunities for blockchain into the adoption and the use cases. So we think technology is coming, money is coming, know-how is coming, and I think we're going to see some big players and big momentum shift.
Thanks for sharing that. I'm just thinking about Mickey, where World Mobile started some of its operations in Africa and really started scaling into the global south, and actually into a country that's not considered part of the global south but has some telephony problems. When you're listening to Andre talking about some of these key trends, what does that spark in your mind?
I think that to be able to use blockchain, you need the internet. So I think the key for everything is the internet, fast, affordable internet. If you don't have that, how do you take advantage, or how do you take opportunities into your own hands? I think we're very different. We were born in Africa, as in World Mobile was born in Africa, and we've now managed to export what we've done in Nigeria, Kenya, Tanzania, Zanzibar, Mozambique most recently, to the USA. It's usually the opposite way around. But I think Africa's a really interesting continent, very, very young, nearly 1 billion people in sub-Saharan Africa, arguably the most entrepreneurial in the world, but 78% are unconnected. A lot of people cannot afford to use the internet. So the basis of everything is the internet. And we've managed to combine internet, blockchain, digital identity into one thing that's seamless for people to use. No education needed, transformation in villages that we've seen, then transformation in towns that we've seen, now transformations in cities that we've seen, and soon transformations across the entire continent.
I mean, 1 billion people need to be housed, and this is a need that empowers tackling. Could you explain a little bit more about the business model and where the blockchain technology kind of comes into that?
Yeah, I think that the biggest thing is around, just we're talking about the formality. The whole thing around it is that all the products, everything has been imported from the global north into the south, which is why it doesn't work. So the entire infrastructure is geared for something, for the market, there isn't a market fit. So the whole principle is, how do we enable that market to be met? And it is a massive market because there is just this pent-up demand. There's an assumption in the cities of Africa that there is no money. But as Mickey just said, it's incredibly entrepreneurial. There is lots happening. But if you can imagine in our part of the world, if you were part of the hustle economy, you have no access to a mortgage, a traditional financial product, because you don't have traditional regular income rather than static. So the whole principle is, how do we create something? How do we build the data that makes what is currently invisible visible. How do we do that? So we have to be forward-looking. We have to take into account what's there. So the principle of intermittent income and intermittent payments is fundamental to anything. So you see it starting to emerge in SME finance, in other forms of finance, microlending, SME finance. We've just focused on housing finance because there is a pent-up demand for 50 million homes, and we believe that people have the right to live in decent accommodation. Because without that, you have no investment in infrastructure, so people effectively live in tin cans because they have to put up their own corrugated iron shacks.
I found it spot on that, because most nations, most countries in Africa, really they have a legacy system. Whether it's in financial, whether it's even in governments, whether it's in property rights. And now we live in the moment where, okay, what happened with AI, what's happening with blockchain, this is an incredible opportunity, I would say, in the coming years to really leapfrog from this old system that doesn't work, at least for Africa standards. And that's where we're betting, right? And that's why we're here today.
So we're talking about connecting to the internet. We're talking about housing. On the other side, Africa, emerging markets are massive commodity powerhouses and typically export a lot of these commodities in their raw form. Daniel, do you want to talk a little bit more about how Zengate is kind of approaching some of these topics?
Yeah, absolutely. So, as you said, Africa as well as Southeast Asia, it's actually all over the world. There are emerging economies that produce quite a lot of the commodities that we consume every day. And the livelihoods of these people rely on this production. Like, for example, the tea farmers in Sri Lanka, they produce about, I would say, it's an industry that employs about 2 million people. It's a multi-billion-dollar industry. However, the lack of access that the average farmer has, or the average factory owner has, tea factory owner, tea plantation owner has, to the world market, whether it's because regulatory, it's regulatory based, or whether it's just lack of digitization, which is something that is rampant in that region, as well as Africa, which is part of what why Mickey's doing is so important. That kind of excludes them from the opportunity to really have this access. And so what Palmyra is about is creating this access for them through the use of blockchain, as well as, I guess, more traditional services. Like, say, for example, one of the biggest issues in Sri Lanka for the Sri Lankan tea producers was payments. You would think that in the 21st century, payments are really, you pay with a credit card, you pay with your phone, you pay with crypto. Try paying in Sri Lanka. They were paying only with bank transfers at 10%. They're borrowing money at 30%. It's access to capital, it's access to payments. What our platform offered it didn't take Web3, it just took regular old business development. It took working with the producers and understanding their needs and understanding what will empower them to create more prosperity for themselves. We basically understood we need to get payments through these people, and so we negotiated with a payment rails provider, and now we can get payments in and out of Sri Lanka at about 2%, with major credit cards, with escrow, really low transaction fee escrow, very easy bank transfers, things that are a lot faster, and you would think that, well, obviously this is something that should be available. It's not. And another thing is, say, logistics. Logistics are also a big issue in these parts of the world. Like, say, for example, another jurisdiction that we're working with right now is Kenya. And Kenya is also a large tea producing jurisdiction. And again, there are issues because of, I guess it comes because of these economies are also run by a lot of MSMEs. And MSMEs just by themselves, say, cannot do a deal with DHL or do a deal with FedEx to cut down their shipping costs. And say a direct source producer that doesn't ship a ton of tea, but ships 100 kilos of tea, is then shunted from this opportunity to reach the global market because their costs are so high for shipping. So what we did was actually we negotiated a rate card with DHL and with FedEx and cut their costs in half. So again, this is all before the tokenized part. This is all before the transparency part. Now, you add the blockchain part to it, and it just multiplies it tenfold. Okay, so now not only do you have access through traditional means, you also have access to information. You also have access to traceability. You also have access to certifications, digital certifications. You have access to much speedier trade. Like say, for instance, again, in Sri Lanka, there are actually pretty strict safeguards set by the government about quality assurance of the tea. The issue is that every single time a new batch of tea comes through, it has to be tested by the Sri Lankan Tea Board. And it physically needs to be taken to the Sri Lankan Tea Board, tested, certificates that need to be picked up, taken back, and then it can only be shipped to the bonded warehouse for export. All these things take time, take energy. I know Mickey's been to Sri Lanka. The roads are not the best, we'd say, just to put it lightly. So if you're in Gaul and you need to go to Colombo where the tea board is, it'll take you like a day and a half to drive, maybe 100 kilometers or 50 kilometers. And that's money. That's money for these people. This is lack of access. And so when you introduce disruptive technologies like digital certificates, where you can basically, all they have to do is send this tea over there, they'll do the testing, then they issue the digital certificate to the tokenized commodity, which can then be sent to the bonded warehouse, which can then receive the digital certificate for clearance, which can then be shipped over to the buyer. That is called opportunity inclusion, including them in the opportunity that the rest of the big boys can get, because those big boys already have access to the legal means to do these.
So I want to pick up on what you're mentioning, where for most people looking into Web3, they just see this internet stuff. And even for people within Web3, they interact with DeFi and other sorts of things through a digital terminal, computer, phone, whatever. The work that Empower does, Zengate, World Mobile, you guys connect
Real world.
This Web3 stuff to the real world. And from the sounds of what Dan is saying, there's only a tiny portion that involves Web3, at least for Zengate. I'd like to hear from you and Mickey as well. In your businesses, roughly, how much of it is Web3 and how much of it is, let's say, more traditional business types of activities?
Yeah, I would say that we're completely underpinned by blockchain technology, by Web3. Telecom is something that, in the quest to be connected, we've given up a lot of our human rights. If you're running a system where you're dealing with lots of people's data, those people want to know that data is safe, that data is theirs, something that's not afforded to anybody, not in Africa or not in the Western world right now. But on the other side, if you're running a sharing economy where people are paying to actually be part of this sharing economy, they're investing into infrastructure, they're owning infrastructure, they want to know that they're getting paid the right amount when someone passes past their air node and they're connected to the internet. Web3 for us, smart contracts, they deal with a lot of the bureaucracy layers that telecom companies may have to have 100, 150 members of staff to run what we're running today. We can run it with smart contracts, and we're doing so. So I would say that, for us, certainly, the transparency, the immutability is a large part of what we're doing, but the functionality that we can get from Web3, from this new technology, actually makes our business far more efficient, far greater, and fairer.
I guess it would be the telecoms infrastructure, whereas with Empower, you have houses that get built, and you source that finance somewhere.
Which sounds incredibly traditional, but in fact, the transformational aspect is exactly the same as Mickey's. Because without the technology of what we're doing, without making it visible and transparent, and being able to take into small amounts, small payments, none of that infrastructure. Look, the end user has no idea that he's pays his rent in normal fiat. So there's no interaction with the technology. He or she doesn't know that they're paying for their house through this mechanism. But the underpinning technology is vital for the transformation, and I think that comes to the whole thing. Without this, we wouldn't be able to innovate. We wouldn't be able to do the innovation. So although it sounds traditional, it's home finance. There's nothing rocket science around providing financing for homes. However, the transformational aspect of it is built on the technology and the difference in mindset, actually. I think there's a whole, part of that is an emerging challenging of the status quo in terms of concept, in terms of the way things work, in terms of, not taking the rules and regulations that have been set, building from the bottom up, empowering people from the bottom up, understanding that these systems have to do that they have to support the individual from the bottom up, not the top down.
Evolution.
Yeah.
That's what you're doing.
Yeah.
And it must feel much greater to know how much rent you've been paying for the last 3 years and how much you own in your house, and to have a certificate to be able to see that and to actually ownership.
Absolutely.
What do people get when they have an NFT? Ownership. That's what an NFT is. I own this. I own this one of one. I own a house. And you have it and it's yours and no one can take it away from you and it's transparent. Or if you don't pay, someone may be able to take it away from you. But it's evolution, right? And that's what technology should be.
Andre, listening to the three other panelists, how and their business models, how does this compare in your mind to more traditional fintechs that you've seen in emerging markets?
That's interesting because what we're seeing, besides let's say an exchange for crypto and stuff like that, if we talk about payment rails, we talk about either for SMEs or the retail, there is an underlying trend that's quite important when we look at fintech opportunities for investments, whether they're leveraging blockchain or not, or even digital assets, is that at the end of the day, in fintech, especially on payment rails and remittance, often fees is a race to a bottom. So where we're looking at is, this is a good example where technology makes a lot of sense because you could reduce costs, a competitive advantage, but also you could build on top of that and bring other services and enlarge or make the vertical of fintech way deeper and way wider. And this is where we see a lot of opportunities. And again, this is quite a good example because the whole time he was talking, we're not hearing much about blockchain, but it's a really powerful engine in the back. And then you could distribute a lot more value and transparency to your clients.
Yeah, that's actually a great point. I wouldn't say that our business is small part blockchain, large part traditional. I would say that the problems that we're solving have been there for a while, and the solution is a hybrid solution. However, the use of blockchain and the use of Web3 technologies amplifies that to where it becomes disruptive, to where it becomes something that is paradigm shifting. And without it, it just wouldn't work. Without blockchain, we couldn't properly track and trace the tea or other commodities or the cinnamon or scrap silver or industrial gold or whatever else we're putting on the commodities exchange. We couldn't do that. We couldn't do that as effectively. You couldn't effectively transfer these certificates. You couldn't effectively offer the buyer an immutable way to trace the commodity and make sure that they're actually getting the real deal, because that part of the world and a lot of these industries are actually victims to counterfeiting. And so this is what I was talking about. This is what the opportunity inclusion is. It's not the producer that is doing something bad. It's the stuff that happens in between the producer and the buyer that screws things up for everybody, that creates all these bottlenecks. And so these bottlenecks are then solved through this transparency, through this engine, as you called it, that just literally amplifies this to where it really makes a global change, which is what I was speaking about in the beginning, which is basically what kind of inspires me and inspires my team is this global change, and inspires everybody here. This is why you're doing it in this particular space, is basically you're making a difference. You're just not making a little difference, you're making a difference for Africa, right? You're making a difference for Southeast Asia, you're making a difference for just, it's something that you can see in people's eyes when you do this. We come to Sri Lanka, we speak to our producers, and these people they welcome us because they get it. They don't care that it runs on Cardano or Ergo or it's NFTs or it's digital credentials. What they care about is that now the tea that I produce, that I take pride in, that my grandfather, the plantation my grandfather started, I can prove to the buyer that this is the real deal, that this is better than this other stuff that the guy sold you for half the price, which is complete BS. It's not real Ceylon tea. This is Ceylon tea. And that's powerful.
Got it. And I want to kind of circle back to some of the earlier conversations that we had. Andre, you mentioned payments, because actually, Dan, you brought that up because that was quite a big part of your solution. I'm curious to hear about World Mobile and Empower. When it comes to payments, how do you look at that?
You don't need to pay on the internet, but the internet's far easier to pay. So for us, it's that's what it comes down to, right? People pay us in cash to use our systems, but they also use mobile money. Africa is one of the largest holders of mobile money wallets in the world. Over 500 million mobile money wallets, right? Yet people don't have connection. They have to walk 3 miles, 4 miles to be able to get connected to a GSM network to be able to use mobile money. So I think that it's kind of relevant, but also irrelevant at the same time.
And for you, Glenn?
Yeah, it's massive in have the same issues that Mickey's referring to. Obviously, a lot of it is still with fiat, but in fact, the transfer of value from an entity perspective, just to give you an example, to get the funds through a central bank of one of the African countries that we deal with, just to get the foreign currency through the central bank took 6 months. Now, to the thing, travel, etc., to be able to transfer value quickly, effectively, whether it's, that transfer of that capability just creates significant improvements in terms of cost. You can imagine trying to run a business when your funding, it's supplied. It's not as if it's not there. It's there, but you can't get it into your account. How can you run a business like that? So it's really challenging for the property developers on the ground to perform. So if we're able to make that more efficient, it's fundamentally transformational.
Awesome. We have a crowd here, and they're probably quite interested about what's next for your startups in 2023. Well, that's almost over. So in 2024, Mickey, do you want to kick us off on that?
Continuing to connect the unconnected, continuing to help everybody.
It's not done yet? You didn't mention?
Not yet, man. Not yet.
Come on, let's go.
Close, but not yet. To making sure that we're able to enable people to run a network for the people, and essentially what we're talking about here is we're fighting tyranny. That's what Empower are doing. That's what Dan is doing, right? You're fighting something and taking away the middleman. You're taking away all those people between the retailer or the producer, and you're actually enabling them to be able to access the world at large in a different way. And maybe not quite as dramatic as fighting tyranny, but if you really look down to it, that's what it is. And that's what blockchain stands for.
Dan, what's it looking like for Zengate?
Yeah, well, again, we're going to keep doing what we're doing. We're going to bring access, we're going to bring digitization, we're going to bring opportunity to the producers and the buyers. We'll do that through the trading platform that we're building out for the actual commodity trade. Right now we do spot buying and selling, but later on we'll actually going to launch the larger commodities exchange that will offer these value vehicles to be traded in a more traditional way. Another piece that I'm really excited about that I think is actually going to be really disruptive and paradigm shifting is the trade DeFi platform that we're going to offer. And so this is a big deal because one of the processes that the producers go through, not just in Sri Lanka, but in other commodities producing countries, is borrowing money for trade. So they constantly borrow money, not because they don't have money, but because that's just how it works. Say, for example, a tea producer in Sri Lanka, they're going to have a crop. That crop gets assessed. Then they borrow money from either a broker or the bank of 80% of the value of the estimated crop, assessed crop. They process the crop, okay, they bag it, they send it to the auction, or they set it up for sale, then they get paid the rest, right, by either the bank or the broker or the auction. They're borrowing money at 30% per annum. 30%. For us in the West, I mean, 30% for a trade financing. Now, of course, this is not because the banks are so evil. It's about risk, right? For a bank, Sri Lanka is a high-risk jurisdiction. And that risk is not just because of political arena or whatnot. It just is. Banks have a different types of risk assessment. However, DeFi can bring vehicles that will de-risk opportunities for lending by a participant in the DeFi field that will actually bring cheaper money to Sri Lanka for trade financing, right? So instead of 30%, we can bring them at 20% or even less, right? Of course, till 20% is quite a bit, but if you're paying 10% less now, that's a big deal for somebody who who has to borrow $100,000, $200,000 every 2 to 3 months or 4 months, and the Sri Lankan rupee being as low as it is. So that's very inspiring to me, and it's also inspiring that we can bring in, we can combine traditional liquidity providers and DeFi liquidity providers in this particular platform. I'm excited about the opportunity to create vehicles that de-risk things for Web3 participants, because DeFi is risky, right? It's high reward, but it's also risky because there's a lot of screwy stuff going on. Here, you don't get 150% yield on your money, but you get 20%. In the real world, that's actually pretty good. So it's I'm very excited about that. And again, we're just gonna keep on keeping on, right, Mickey?
100%.
Yeah.
Great. How about you? Or Empower?
Yeah, also housing the unhoused and making the invisible visible. That's a key part around it it's constantly building the data, because the whole perception of risk, part of that is because it's invisible. So there's this perception that people won't pay for their housing. Now, throughout COVID, we've proved that people will bust a gut to pay for their own home. It's completely the reverse, actually. They are far more likely to maintain those payments than the reverse. So that's what we need to demonstrate. So we need to demonstrate, because the risk assessment is because there's no data. So how do we build the data, how do we build the value in the data that we can reduce that risk so that we can reduce the costs? Because again, in Africa, most people pay 30% for a mortgage. So because of the perceived risk, because there's no data. So how do we prove that? How do we build that data? Make the invisible visible so that we can house the unhoused.
So this is actually a really interesting point, in the sense that I was recently at Building Bridges, a sustainable finance conference, and the story of creating a bit of a data story, a financial data story, is super important for these, let's say, traditional financial institutions to unblock this credit. Obviously through telephony and the use of telephony, commodities, as well as housing. I think we're really in an interesting space when it comes to that. So back to you, Andre. When it comes to this financial data story, when it comes to connecting digital finance and infrastructure to real people, does this fit with some of the trends that you're observing? Does this fit with some of the foresight that you and your firm have?
It's a massive opportunity that I don't think it's been cracked yet for the continent, and even regionally, obviously, I generalize. But what we look for in these ways to finance, let's say through DeFi and whatnot, is finding ways to mitigate that FX risk. Again, you look at the Naira, devalued 25% in the last 12 months. Why would a local startup have to assume that FX risk when all their economics is in Naira? And this is quite challenging to mitigate, right? So you want to get foreign capital, come into a DeFi pool, finance US back, convert to Naira, but it squeezes those startups, it squeezes the founders quite a bit locally. The second thing that we want to look at or see is a reducing costs of debt, of capital. So it's really hard to find that middle ground, and I think there's a lot of people trying to figure it out, and it's going to be a huge boom once this is unlocked, because they need capital. They need financing to grow, to buy housing, to have a better standard of living.
Thanks for that. And so we're kind of entering the last bit of our panel. Can our panelists, one by one, and with a maximum of 30 seconds, tell the crowd what they'd like to see in the next 5 to 10 years when it comes to the adoption of blockchain technology, and then maybe their specific areas of focus?
You don't need to have 30 seconds. Make it easy for people. Make it seamless. Mass adoption will only come in that way.
Dan?
Yeah, I mean, exactly. What I always say is that as an industry, we got to stop pretending like the average user, the mainstream, is going to care about a lot of the things that excite us about the technology. All they're going to care about is that it makes your lives easier. You can get a payment through faster to where you couldn't get payment through. You could pay for your house. You can pay for a commodity. You can pay for telecom, right? You can prove that you are who you are. You can prove that this house belongs to you. How you do it, how many people use the Visa card versus how many people know how the Visa network works or how many people care how it works. That's how you got to approach it, and that's what I hope the industry will finally understand as a whole, that what excites us will not excite the masses. The utility will. And that's what we have to focus on, is the utility and the UX.
Yeah. Two things for me. This panel is an example of that. Solving a problem that matters. And not the other way around. The second thing, enterprise adoption.
Awesome. Glenn?
I'm going to be more relevant to today, and that is the official part of the summit is the official NFT, and part of that is supporting affordable housing in Africa. So we'd really appreciate your support today to make it happen for the future.
Good.
Buy the NFT.
Thanks so much, everybody.
Thank you very much, Alex. Thank you very much.
Thank you.